Perfect. So welcome everybody today for our Lunch and Learn today. Before we get started, I just wanted to let everybody know about a program that's closing on Friday that we have launched. So right now our Momentum program. So if you're a small business owner, a nonprofit, a charity, and you need some help, the program we have right now is a mentorship program called Momentum. Applications close Friday. There's no cost to you, and the whole goal is to help you navigate. It's like an intensive mentorship, a 3-month program to help you navigate a problem point. So we wanted to make sure I forefronted this before we moved into our session today to let you know that this program, first set of applications closed Friday. The next set will open next week, but we just want to see how many people can get in right away, get you started, get you help as soon as possible. So if you are interested, I will throw the link in the chat, but also you can reach out to me, success@guelphbusiness.com. We also have it all over our social medias and on our webpage under the programs section. So do check it out. If you need any other questions or comments, please let me know and I can try and answer any of your questions for that. Okay, so moving on. Today we are joined in our Lunch and Learn by Kristel Manes, our Executive Director for the Business Center Guelph-Wellington. And today we're going to be talking about what you need to know and how to decide on registering your business. So Kristel, welcome.
Yeah, thanks, Angie. Thanks for that. And just as a quick note, yeah, anybody interested in getting some help, please sign up. Don't delay. It's a great program, and so we would love to help you with your efforts to sort of navigate the recovery period after COVID, and as we try to get business back to the new normals now. So, yeah, so I'm happy to be here. Thanks for asking me, Angie. And as you know, we have a lot of people who come through the Business Center interested in starting a business. Some have already started. We even have existing businesses sometimes that they started out as a sole proprietorship, and now they're looking for direction as to when to move to incorporation, or if they should or not. So, but the biggest thing I would say is that this is kind of the information you need to think about before you actually register, right? So we have a lot of people who come in and they've already registered, but really didn't have an idea of what they registered or how they did it or why they did it. And so we want to just give you some thought today about what you need to think about before you even do that. And I would align this with having a conversation with one of our business advisors prior to you making a decision. So here's the information we're going to present to you today in a very high level, very quick sort of reference points, and then book an appointment that's free of charge with one of our business advisors to sort of say, here's what I'm thinking, here's why, and they can help guide you accordingly. So before you make any of those decisions, it's good to get some advice, okay? And that's what they're there to do. So we'll walk through it a little bit today. Thanks. I've got a PowerPoint because it's a little easier to sort of see it here and sort of like I said, you'll be able to play this back if you just can't figure out what we said or you forgot what we said. But we'll talk a little bit about sole proprietorship, partnership, incorporation. I will touch on a little bit very briefly on co-ops and cooperatives, but we will certainly refer you to our friends at On Co-op because they are the experts in that field. So yeah, let's get started, Angie, and we'll sort of wrap through this. So these are sort of the three basic forms of registration, business ownership, if you will. Sole proprietorship is probably the easiest, cheapest way to get into business. It's a $60 registration. They've changed the process a little bit now. The process is actually a little bit more intricate as far as the registry process, but basically what's happening is you're registering your business as a one-person owner. And a couple things I want you to think about. First of all, when you decide to start a business, you decide to register your business as a sole proprietor, your year end is December 31st, same as our personal income tax year. So same as our calendar year, if you've heard that referred to. And what that means is anything that you make in your business, you will actually declare when you do your income tax, your personal income tax at tax time, usually in March for most of us, right? We try to get that done in March. So if, this is really important for anybody who's sort of just starting to dabble in having their own business. Maybe you already have a full-time business, and so you've sort of created a side hustle that you've got money's coming in through a side hustle. It's going to be important to know that it becomes because at tax time, you are going to have to declare your T4 as normal, as well as any income that you've made in that side hustle. So sometimes that can actually increase your tax burden, right? Increase your percentage of tax that you end up having to pay out. And there's some tips and tricks about how to sort of alleviate that. And we run a seminar. Angie runs one in conjunction with CRA. And so I will point you in that direction. Angie can speak to that later, because they do an excellent job of how you can offset a bigger tax bill by different things that you can write off and stuff like that. So it's the easiest, like I said, it's easiest, simplest way. And the other thing I want to just mention quickly is the risk factor. So if you do decide to register as a sole proprietor, there is, you want to make sure that you have some kind of business insurance. And the reason I say that is because the business is tied to you personally in a financial sense, it's also tied to you personally in a legal sense as well. So if you have your business running and anything happens in the business that could cause injury to somebody or cause problems for somebody else, you run the risk of being sued. And because you're a sole proprietor, that lawsuit would be tied to your personal assets. So your house, your boat, your cottage, your car, those are all things that you could potentially lose if you're not properly protected. So that's one thing that we always want to emphasize. If you're considering sole proprietorship, that's something that you need to check into, depending on the nature of the business, to make sure that you're properly protected. If there's more than one person and you're, but you want to keep the level of price point down, and I'll talk about that in incorporation later, chances are you might look at what we call a partnership, and we'll talk a little bit more that. I know there's some slides to back that stuff up. And then incorporation. Incorporation is more on a larger scale level, and there's some bigger implications when you look to incorporate. So we'll talk to that here, but I want to make sure that we cover everything on sole proprietorship. So I think there's next slide, Angie, there's got a few more things, because that tends to be the way people most think. When you register a business, for sure, and some people say, well, do I even need to register as a sole proprietor, Kristel? If you're using your own name, your own personal name, so if I was to register, if I was going to start a business tomorrow with Kristel Manes, that is my personal name. That's my legal name. And no, I don't have to register Kristel Manes because it's my name. However, if I attach names that don't belong to me, then I must register. So if I was to open up a Kristel's clothing boutique does not belong to me. And so I would have to register the business. Same with an incorporation, it's the same deal. If you are running the business, when you set up your corporation, if you want to incorporate your name, you can do that. If you're looking to use another name, like a trade name, or if you're looking to register as what they call a numbered company, which you'll ever see that is like 1, 2, 3, 4, 5, 6 Ontario Inc. or Ontario Limited, then you do have to register the business when it's not your name. And same with a numbered company as well. Same for a partnership as well too, right? If you're both using your names in the partnership, your personal names, same thing applies. If Angie and I are going to business tomorrow and we want to call it I don't know, the business center, let's say, we would have to register that because that is not my personal name or Angie's business name. Okay. So there's lots of things, complexities about that. But the biggest thing about sole proprietorship is to remember is that it's tied to you personally. It is a cheap way to get started into business. You can move up from sole proprietorship. So, we'll talk about why you would do that in a little bit, but you can move from sole proprietorship to incorporation, perhaps, if your company is growing and moving in a very positive financial position. There might be a way to look at that and to do that and consider it then. These registrations are good for 5 years. And now with the Ontario government has now implemented a new registry system. So I'm hoping that means that they will let you know when it's time to re-register. It's yet to be seen because it's just brand new, the system that they're doing. So it's a little bit more formalized process. But it is my hope, because up until this point, there was no ministry or department that actually monitored this. So I think that's what the tie-in now is, that they're going to be able to, keep track of people who are registering as sole proprietors, and then be able to, remind them and do follow-up information in years to come. Let's hope. But that's sort of the basic level for that today, for sure. All right. And I know, so as I said, just as a reminder, sole proprietor is an unincorporated business. It's one person. You are, as a sole proprietor, you are responsible, obviously, for making this, the decisions with the company. You take the responsibility of making those decisions. Your year end is automatically December 31st. So you will always declare your income when you do your personal income tax. There's actually a section for small business sole proprietorship on personal income tax section. So that's where you would record the information. And, it's important that, you make sure that, you have a separate bank account for your business, even if it's, financial record keeping and things like that are really, even though it's tied to you personally, it's important to keep the business, the financial piece separate from your own personal bank accounts and things like that. Because, as a sole proprietor, you can absolutely be audited by CRA. And it will be important to show that you've handled transactions separately, separate business accounts, separate credit card, whatever that looks like, in order to show the business portion of it. Otherwise, your personal income, if you're using your personal income, like your personal bank account for your business as well, then you will be, you could be subject to audit and paying higher taxes on money that wasn't necessarily associated with the business, but got counted in anyways because you didn't declare the difference of the two. So little trips like that. And it's not a big deal to open up a separate bank account these days and just have everything nice and clean and neat over there, for sure. Okay, I think we're on to partnerships, maybe, Angie? Yes. So there's two types of partnerships. There's what we call a general partnership, which is a 50-50 deal. And there's one called a limited partnership, which is more like your 90-10, 70-30, 60-40, whatever that looks like. When you register this business, it is basically the same procedure as the sole proprietorship. So it's the same price point. It's about a $60 price point. You would just register both yourself and your partners. So your information, your partner's information, and then what type of partnership. It's 50-50, or if it's 70-30 or 60-40, you would list that down. Your year end is the same as your personal income tax year. So it's the very same thing. So whatever monies you make, you would then, depending on the percentage of the partnership, you would split. So for example, if Angie and I are in business and we're 50-50 partners, at the year end, December 31st, we would look at the money that we made. Angie would declare 50% and I would declare 50%. It would be the same if there was a loss, because sometimes, first couple of years of business, you might have a loss. Angie would declare 50% and I would declare 50% of that loss. Okay. And we each have our own personal income tax that we would report that 50% on. Okay. With a limited partnership, like I said, it depends on, sometimes they can get a little bit more complicated, so you need to define, and I'll talk a little bit that in a second, but you need to define again on, from an income tax point of purpose, how much, if it's 70-30, Angie would declare, her 70%, I would declare my 30%, and that's how we would record it. But it's really important to understand that regardless of what that number looks like, whether it's 50-50 or the limited number, you both share the responsibility. That's the one part I want to highlight. Okay. So, if we're running a business tomorrow and maybe our business doesn't take off, maybe we run up a lot of debt and, come tax time, people are looking to get paid and, suppliers are looking to get paid, and I decide to run off to Vegas. I always tease Angie, I love Vegas, so I know where to hide in Vegas. And Angie says, well, okay, Mr. or Mrs. Tax person, I'll pay the bill, I'll pay my 50%. And they'll say, well, no, actually, you're going to pay the 100%. And it's up to you to find Kristel and make her pay you back for that. So I really want to clarify, and Angie and I could write a book. We could spend, next 10 hours talking about horror stories that we've seen in partnerships. And so it's really important to get clear on that. I think the next slide talks a little bit more about that in detail. Yeah, here's my word of caution. Because of the horror stories we've heard along the way and we've witnessed and we've seen, because oftentimes, people will choose, their best friend from kindergarten or a family member or their spouse. Even if it is your spouse, it is incredibly important. I don't care who the partner is. I don't care what the relationship is. please do us all a personal favor. I'm asking you personally, Angie's asking you personally, to get a partnership agreement in place, because it's really important to be clear on what the contributions are, what happens when there's profits or what happens when there's losses, what each of the roles are of the partners, what and detail it. What are the responsibilities that each partner is responsible for? In the example that you might hear sometimes the terminology a silent partner. So if Angie has 90% ownership of the business and I'm 10% as a silent partner, I still have a role there. So it would be important for me to define what that 10% allows me to. I think Angie would be pretty upset if she was working really hard in creating a great business and there was lots of great profits. And even though I'm only entitled to 10%, I'm actually taking 50% because I'm helping myself to product, or I'm helping myself to services that she's offering, or, I'm taking advantage of that partnership by not taking my 10%, but rather taking my 50%. So it's really important to clarify what roles are and what each partner brings to the table and what each partner can take off the table. Okay. And it really helps if there's partnership changes. Sometimes people grow out of partnerships. They've done what they want to do. Maybe somebody wants to retire. Sometimes, a death happens when one of the partners passes away. So you really want to have it documented as to what happens next. Who is responsible for that, the other partner's share of the business? Is it in a will? Does it go into a family member? Does it go to a friend? Is it the opportunity for the other partner to buy that partner out? You need to have those conversations because it's really important to clarify now, when you're both here, you're both working to build this, what the rules are. And nothing worse when you have conflict between partners, because it throws off the business, it throws off the model. And I can tell you from personal experience, I know of partnerships that, one partner passed away and the government actually froze all the assets until the reading of the will and things like that happened. So they have the absolute right to do that. And it wasn't until after the will was read that the partner passed away, what happened to their shares, and it ended up having a spouse of the partner who the other partner didn't like, and it created even a bigger conflict. So please take the time to really spell it out. There's partnership agreements, there's simple templates to do, but will save you a lifetime of disruption. And I'm going to say partnerships are challenging, even if it is your best friend from high school or kindergarten. You're going to have times where you're going to run up against each other. And so having these things clearly documented will help you transfer and go through that journey together. Okay.
I do, just to add in, I do really like the idea. I've seen a few where they've added in mediator clause,
Right.
that if they have
Yes.
a certain level of conflict, they have to bring in a third party
Love
mediator.
that. Love
And
that.
I just think that's a really interesting and well thought out clause, so that it's not always just head to head. It allows you to bring that third party to get their feedback. They have to be an expert
I
in whatever
love that.
field. But I thought that was a really neat clause that I've seen recently on a few of the partnerships
Great
agreements that have
idea.
gone through.
And to your point, when there's conflict, there's emotions, and we say things and we do things that we maybe just, it's coming from a different place. So a mediator can help sort that out in a very professional and organized way. Yeah. And actually can diffuse conflict a lot of times. So that's a great suggestion. Yeah. So that's sort of the two. Now, incorporation is sort of the third most popular that way. There's two types of incorporation. There's what we call a federal incorporation, where if you were planning to open up a business and you wanted to expand your business. So for example, maybe I had a clothing company that I wanted to, and my plan was to put head offices maybe in BC and maybe one in Newfoundland, because I'm planning to ship to Europe and, and across the oceans. I would probably start off with a federal incorporation, because what that does recognize is that my business will have head offices in other provinces instead of just Ontario. Okay. So that's kind of where you would think and it's possible if you're just starting slow and saying, yeah, no, we're just worried about Ontario, then you would start off with a provincial incorporation. And what I would say to that, it doesn't mean that I can't do business in the other provinces. That's not what I'm saying. It's just a tax structure that will help you if you decide to have, like I said, the keyword is head offices in other provinces, then it makes it easier to have sort of a federal incorporation to umbrella all the provinces, if that makes sense. In those examples, if I did have that warehouse in Vancouver, let's say, and I had one in St. John's, I would still have to, my company would have to follow the rules and the tax laws of BC and Newfoundland. But again, the overarching structure of the business would be able to sort of have that all underneath of it, right? So you'll notice big corporate companies like McDonald's, Second Cup, Tim Hortons, they would all be federally incorporated because they have head offices across the country in different provinces. So that would be a good example of that. So the biggest thing about incorporation is the dollars. I'm going to tell you here. We'll talk a little bit more detail, but it does cost money to incorporate. It usually is in around the $1,000 to $1,500, depending on the complexity of the incorporation. So it's something to think about. We'll get into more detail here. And just think about this. If you did start off on a provincial incorporation and your company did expand and you did move to other provinces, you can absolutely roll that into a federal incorporation at a later date. So that's not a problem. We'll get into a little bit more detail here because there's lots to think about when you're incorporating. So, first of all, with incorporation, that there is a year-end flexibility. If you remember what I said about sole proprietor and partnership, it's December 31st. Doesn't matter. There's no moving that date. With an incorporation, you can actually change your year ends, so you can have flexibility in that. And why that happens sometimes depends on the nature of the business. I had the pleasure of owning a home hardware for many years, and we were incorporated, and our year end was actually January 31st. And the reason we did that is because we, our season was busy. We had all the 4 seasons were busy, but by December, the end of December, we had sold off a high majority of our inventory. Through Christmas, we had gifts, we had appliances, we had all kinds of stuff. So at January, a hardware store we were at our lowest point in inventory, which meant it was easier to count. You can imagine the inventory you have to count. Yes, we do count nails and screws and all kinds of good stuff. But it was at its lowest point in January. So it made sense for us to do our year end at that point. Okay. Things like I talk about the gift that keeps on giving. If you have an incorporated company, you can gift the company to family members, to people. And again, it depends on, you can gift seats, you can gift ownership, things like that. So there's tax benefits to doing that for sure. So if you have a family business and your intention is to pass it down to your child, then I would definitely look at incorporation because the benefits are there and it can be structured in such a way that it's easier and less taxes that you have to worry about. I'm not saying there's not taxes, but there's ways that accountants can do it that can structure it in the best interest of the person it's being gifted to. It will attract investors. Certainly, if you're looking to market your business, maybe you want to sell your business at some point, it's certainly more attractive when it is incorporation because people just can understand the complexity of the corporate structures, and it just, for some people, they see that as more business-like. I'm not saying that's the case, but there is that attraction from investors. They feel like there's a lot more protection there. Liability, you remember me saying as a sole proprietor, it's really important to get insurance. You also need to have insurance in a corporation. But the difference is when you incorporate, you separate business from personal. So what I mean by that is if I incorporate my business becomes its own entity. I'm still the owner, I'm still the chief, the head person there, but it's protected my private life. So my house, my boat, my cottage is over here. And then the assets of the business are what then, if my company is sued, that's what would go first, right? There's walls of protection, if you will, with liability. There's structures. Incorporations are very structured in bylaws and how they run, and this is all agreed on. If you need some help with this, we can actually direct you to people that can help sort of walk you through what you would need. Again, I can't say it's one way because there's lots of complexity, whether you want to have a payroll and you want to be paid as an employee of the company, or you want to take stock options, or you want to do dividends. Again, depending on how many people are involved, and you can have an incorporation with just one person or lots of people. So, having those good conversations, and we certainly can direct you to people who you'd have those conversations with. Securities, if you're looking at selling securities within the business, definitely has to be incorporated structure. There's tax rate advantages. Certainly, the taxation for corporate is different than personal income tax. If you remembered my example when I said, as a sole proprietor, if I had a full-time job and then I had a side hustle, and at income tax time, I'm now, because of my income and this extra income, I'm now paying at a 45-50% tax rate. That can bite. That hurts, right? That's a lot of money that I'm paying out of my pocket. Whereas the tax structure just for the business can be different, and the taxation rate will be different than my personal, right? So it separates that too. And in some cases, it can be a lot more advantageous from a tax perspective to have incorporation. Again, you can have multiple owners. You can employee benefits, things like that, So, if you plan to bring on staffing, you're able to provide benefits, including health and dental and things like that. It's easier for incorporated companies to get benefit offerings as opposed to sole proprietor, which you struggle with even getting coverage for yourself as a sole proprietor. So, but incorporations are recognized and usually have benefit opportunities. There's a credibility. Name protection is a great one. You can, once you incorporate, if you decide to incorporate with the name of a company, specific name other than your own, you can, once it's incorporated, they will do a name search to make sure that it's not being utilized by somebody else. And if it's open, then you can actually protect the name itself too, which becomes part of your corporate identity, your brand awareness, things like that. You can be sure that McDonald's has name protection, and that Angie and I couldn't go and start a McDonald's tomorrow just on our own, because we would get lots of letters very quickly from lawyers saying cease and desist. So, but if you do have a kind of cool name that you'd like to protect, you can trademark it, or you can also look at incorporation as part of that process. Financing options, again, corporations tend to be seen at a different level financially. And so sometimes the lending structures are a little bit more advantageous as opposed to somebody who's on their own as a sole proprietor. And if I'm looking for $500,000, it might be a little bit harder. But if I'm incorporated, I can show my tax structure, I can show my shareholders and things like that. So there tends to be a little bit more, certainly depends on credit ratings and all that stuff, but it's, from a visual point of view, it seems like you have, your stuff together. Quite frankly, it's a little bit more organized and structure. And then choice of pay, as I mentioned, you can think about dividends, you can take options, you can take, you have your own investment, you can pay back at different rates. You can even do a T4, like you can have regular tax payments and you're just considered an employee of the company. I think even if you're the only employee of the company, you can still, get a weekly paycheck or bi-weekly paycheck and things like that. So there's lots of benefits that way. I'm not trying to sell incorporation, but I just want to say here's where it sort of differs from sole proprietor. But there's some disadvantages too, and I just want to mention that as well too. So the administrative costs, as I mentioned, it tends to be a lot more expensive to incorporate. So as I mentioned, $60 for sole proprietor partnership, you're looking at least $1,000, $1,500. People will try to do it online. They'll have sort of generic incorporation statements and things like that. I would highly suggest you get those checked over by a lawyer anyways, because they're blanket statements. Not everything in those statements will apply to you it might actually set you up in a position where you are liable for something that you don't maybe have a full understanding of. I do not have a legal brain, so when I need something looked at, I have no problem going to a lawyer to make sure that my interests are protected, right? And so that's one thing you want to think about. With incorporation as well, you do have to do year end. You have to have your books audited by an accountant. Usually a lawyer will sign off on the minutes that you have. Even if you're a corporation of one person, you still have to have meetings with yourself. Yes, you do. But there's ways of sort of saying, here's what we worked on. There's got to be a record keeping of sorts of what was transpiring in the business itself. You can't, if you have losses in an incorporated business, so you have your first year, you can actually claim personally. So if you remembered my example with sole proprietorship, if I'm at a loss at the end of the year, if I was in the negative, I can claim that towards my personal income tax. And what that does is it just shows up a credit. So for example, if I owed $5,000 in income tax, okay, from the money I made this year, but I had a small side hustle on the side. And with all the, I could claim some of my office space, I could claim, the gas, I could claim different expenses that are related to that side hustle. That amount would work against what I owe in that $5,000 of tax. So then I might only add, maybe after we've done the deductions and things like that, I might only owe $1,000 as opposed to $5,000. So it shows up as credits when it's a sole proprietorship. But if you're an incorporated business and you're at a loss, I can't use those towards my personal income tax. I just can't. It's separate. They're separate entities. Okay. And there's things like as a corporation, there's rules around tax about how you distribute it. I won't get too technical about this, but if you had shareholders in the company, and how that they receive their monies is distributed, then they can't, the way they must, pay their taxes on that money and things like that. Like, you've got to be careful not to double dip almost and double tax people, right? So, but there's, like I said, the best advice I can give you as far as incorporation is concerned is, before you even think about it, please have a discussion with an accountant. And you heard me right. I didn't say lawyer, I said accountant, because a lawyer certainly will be happy to draw up the paperwork because that's what they do for a living. But an accountant will have suggestions as far as, are you ready for it? There might be other accounting ways that you can sort of handle taxation and that without having to go to the expense of incorporation and, the management of incorporation. So I've heard of sometimes where somebody could do, maybe I can pass off and do income splitting, so that some of the money I make in my side hustle, I might be able to move to my spouse or my partner's income tax instead. So again, it sort of alleviates that big tax bill, and it's a strategic way of me getting rid of that income without having to go to the level of incorporation. So, and we're happy to recommend, we've got great accounting companies that work with the Business Center. They will talk to you for half an hour free of charge. And they can give you some basic advice. And then if you're interested in working with them, they can help you with that as well. Yeah. But yeah, so there's, like everything else, there's the good and the bad. Okay. And co-ops, like I said, we don't want to forget co-ops. I won't spend too much time on that because, like I said, our friends at On Co-op do an amazing job at educating and teaching people and supporting people interested in starting co-ops. But, basically they're, the reason why co-ops sort of come to play is that there's, like an interesting model that somebody wants to do where there's more community based, maybe you want to bring multiple partners together to create, or multiple people are interested in a business model. Often see it where there's might be a local business that's closing. I've seen this before where the owner might be retiring, or just can't keep up with the business expenses, or just deciding to close it, and the employees will rally together and actually try to buy it through a co-op model, which is great. There's lots of different ways to do it. It's kind of the structure is very different. But like I said, we talk about it, but they're not as popular. They seem to be more popular out west. When I lived out west, there was a lot of co-ops out west, and so there certainly are co-ops here in Ontario. Gayley is a perfect example of a co-op. They are a co-op that have been in business for years and years and years. So yeah. Like I said, I know on the next slide, I think I have our friends from On Co-op, but it kind of talks a little bit about it. We'll go in a little bit of detail, but I won't spend too much time. So as I said, it's a versatile model. You can have, each shareholder has a vote, the way that co-ops are set up. So if you buy into a co-op, if you put money into it, you have a say in the matter. There's structures around, people can come and go. A lot of the credit unions, for example, are co-op models as well. Where you come on board if anybody's ever joined a co-op, either through a banking institution like Meridian, or there's different organizations that have that. You buy in, you put in your $100 or whatever, and you become a member, and you'll have you'll hear about shares and proxies, and you get to vote at year ends and audits and AGMs and things like that. So that's part of that co-op model. Disadvantages, sometimes it's just in the organization, the feasibility of it. Like, there needs to be work before you set up a co-op. There needs to be a lot of work done just as far as the feasibility, the sustainability of the co-op, making sure that there's constantly going to be members that are moving it forward, that there's new opportunities from new members to come in to continue to fuel. There's always, there tends to be a board of directors, but depends on how that structure is and what's their control versus a member's control, and just making sure you get all that stuff ironed out. And then, like I said, there's just not a lot of awareness, but it's a really interesting model. If you have a couple people who are interested that are not really big fans of corporate, or the whole idea of corporate just doesn't appeal to them, then co-op would definitely be a place to do. And as you can see, we've got our Ontario Co-op Association at the top there. They do great work. They're here in Guelph. They're just located on Douglas Street, but you can certainly check them out on their website. And Peter Cameron is a friend of the center, and he would be happy to talk to you about even if you just want some ideas. He can happily talk to you about that. I just want to bring this back to insurance, because regardless of what structure that you decide to register a business, you really need to think about business insurance. There's a lot of reasons for that, but very quickly, as I said, a sole proprietor and partnership, it is tied to you personally, so you don't want to lose your assets because something goes wrong in a business. There's things around, as we mentioned, also sole proprietors and partnerships. There tends to be not as many programs available for benefits or insurance programs or anything like that. They're very limited. So, what happens if something happens to somebody, as a sole proprietor, if I'm running my business and I, get ill or have an accident, God forbid, and something bad happens, what happens to the business? What happens to keeping the bills paid? What happens to my family who's relying on my income from the business to help pay the bills? What happens? And we often don't think about that stuff until it's too late. We're already in the situation, and now we're trying to be reactive instead of proactive. So we don't sell for insurance, but we have lots of great insurance people that can happily talk to you a little bit about your needs. But it's definitely something to think about. And you have to have, I will tell you, in this day and age, things go wrong. An example would be if I was in, and there's certain business, I would say that risk factors are huge. So anybody doing, and as I said, as an added note, I'm not advocating for one business registration over another, but I would say that if you're doing any kind of like landscaping, yard work, building, contracting, food, any kind of food, cosmetics, skincare, anything that has an opportunity for somebody to get hurt, to get sick, a restaurant, to ingest, things happen. I would tell you to incorporate right off the bat. Incorporate, and then your business will also buy insurance on top of that. Okay, because the risk of something happening are a lot greater in those types of models of businesses. You build a deck and the deck collapses and somebody gets hurt. You create a great chutney and you forgot to label it with the ingredients, and somebody has an allergic reaction and either seriously ill or passes away. Like, life happens. And so I really would encourage you to have that conversation, regardless of how you register, on what insurance requirements you would need. Okay, yeah. Lots to think about already, Angie? We haven't even registered the business. But like I said, we meet lots of people at different stages of startup, or different stages of expanding their business. And, I would say, please take us up on the services that we offer at the Business Center. We are a not-for-profit organization. We provide these services. We are funded through the Ministry of Economic Development, Job Creation and Trade. And these, quite honestly, folks, are your taxpayers' dollars coming back to you. So the easiest way to get a hold of us is find us at www.guelphbusiness.com. If you'd like to book a free appointment, you'll notice a Book Now tab in the corner. It's great. It asks you a little information about who you are, what you would like to talk about, and then you will receive a calendar of the advisor we feel that's probably most associated to you and would have experience in what you're looking for. You get a calendar where you can pick the date and time that they have available that works best for you. And these days we still remain virtual because of these sort of uncertain times. So all of the consultations are done virtually through the use of Zoom. So once you confirm a date and time, you'll receive a Zoom link for that date and time, and then you can speak to your advisor. We hope to one point have some drop-in services reinstated, but we sort of have to follow the protocols of these days and the comfortability of people. And some people are comfortable, some people are not. So we're just sort of navigating this one day at a time. But in the meantime, our programs. Please check out our workshops. We have amazing, Angie does a great job. She's our program coordinator. She puts amazing programs together, workshops. They're all there for you to utilize. Please utilize it, all right? Because that's what we're here to do. Anything else, Angie?
No, I think that was wonderful. So
Yeah.
anybody who is watching online through our Facebook or our YouTube after the fact, if you have any questions, do reach out to us, success@guelphbusiness.com, or you can check out our website, guelphbusiness.com. And the nice thing is it's open to everyone. So it doesn't matter. We've had participants from across Canada and
Yes.
even internationally to some of our
Even
sessions.
international, yeah. I was just
Yeah,
gonna
and
say,
so it says straight out, most of the sessions are free. We do have some that we have paid once in a while, but that's just because of funding. But we are always looking for new stuff. If you're interested, or if you have
Yeah.
questions, or if there's something that you're like, oh, I could really use information on this as a small business owner, please send me a note. I'm always looking for new topics to look into and new
Yeah.
presenters. So this is always something that we're cycling through. So keep an eye on our events page and our program page. If you're a small business, nonprofit, or charity in Ontario, please look at our Momentum program that is applications open. If you are across Ontario and like to be a mentor, please connect with me. We are always looking for mentors to help businesses grow, to help nonprofits, to help charities. So we're always looking for more resources. So if you have those and you'd like to give back to your communities, please connect with us, and we'd love to have that chat as well. So next week we are not having a lunch and learn. There is a bunch of stuff going on within the organization.
We're doing some learning ourselves,
So
aren't we, Angie?
we're
We're going to a conference.
We're taking a day to go to a conference and do some learning on our end.
Yeah.
So we will not be having a session next week, and I'm still in development for my end of month session. So I will announce what those are in the next coming week. And you'll be able to start signing up for the ones for the end of May and into June. And so for now, thank you, Kristel, for joining us today.
My pleasure.
Everybody felt this was very informative. And if you have any questions, reach out. We'll see you all again soon.
Thanks, Angie. Thanks, everyone. Have a great rest of the day.